Get the tools you need to become a free and independent trainer with my Dumbbells to Dollars course at www.dumbbells2dollars.com. Hi doing everybody, Jonathan here, and in this video and in about 5 minutes, Celestia Original Fit Boss is going to go over capital gains taxes as we delved a little bit into investing in a video that I made last week, and a lot of you have started to open up your minds to the idea of creating an extra revenue stream through investing. Investing your money so that it can grow, making it work for you. And the one thing that you have to understand is that whenever you make money, you probably owe money to the government at the end of the year. And investing is no different. So I want to give you an idea of how taxes will work, specifically as it relates to individual accounts on platforms like Webull or Robinhood, which I suggested last week. Now, the one thing that I have to always say is that I am not a financial advisor, and the information in this video is not to be taken completely as law. It is to be viewed as informational and entertainment information only. Okay, so there are a number of different ways to invest. You have your individual IRA, you have your Roth IRA, you have your SEP IRAs that sometimes are tax deferred accounts or tax sheltered accounts, but I necessarily don't like those. I'm going to focus specifically on investing, trading shares of stock, buying and selling shares of stock, because that's what I'm into right now. That's the only thing that I feel really comfortable talking about. And if you need more information on IRAs, let me know. Maybe I'll have to get another expert on, and then we can kind of answer your questions then. But specifically as it relates to paying taxes on your investment account with something like Robinhood, at the end of the year, you're going to get a 1099. And a 1099 is something that you might be used to if you own your own business, your own LLC, because you're not essentially an employee. You're, as an entrepreneur, you get a 1099. All right. Or as an independent contractor, you fill out a 1099 at the end of the year. Side note, if you're working at a big box gym, you probably get a W-2 or W-9 at the end of the year. I would always ask if the gym would allow me to get paid as an independent contractor. I'd always rather get paid at 1099. Now, it will require you to pay your own taxes at the end of the year, so you will have to set money aside at the end of the year to pay your own taxes. But it may be easier to write off expenses that are specifically related to your profession more easily. All right, so that's what I always did when I was working in a big box gym, toward the tail end at least, and that's what I would recommend that most trainers do to just have more control over their lives. Now, you have to understand that when you have an individual account on a trading platform like Robinhood, everything that you do matters. So like as you buy and sell shares of a stock, that's all going to be calculated into what you owe at the end of the year. And essentially, you're going to be taxed as falling into one of two categories, either as a short-term investor or as a long-term investor. And it's very simple. A short-term investor buys and sells shares of stock within the same year. A long-term investor holds on to shares of stock for more than a year. It's that simple. It's just that they're taxed differently. So I have both strategies. Essentially, when COVID-19 hit and the pandemic hit, I saw a sharp drop in a lot of travel stocks, airline stocks, casino stocks, gaming stocks, and I bought those with the assumption that within a year, they'd probably rebound and I might make money off of it. So that was a strategy that I took. It's aggressive, it's scary, it's volatile, but I'm the type of person that is very risk tolerant. So I bought shares in airlines and casinos and resorts and things like that. And I'm just kind of waiting for the market to jump back up. I also noticed that there would be an increase in demand for certain communication platforms like Zoom, which I use often, but a lot of businesses are now relying on Zoom in order to make sure to keep social distancing. A lot of the layperson is using Zoom now, so I also invested in that. It's actually doubled since mid-March, from 116 to like 224 today. So that's something that I would want to share. That's something that I would want to sell within a year. And how am I going to get taxed on that? I'm essentially going to, all of the gains that I make, I'm going to get taxed on with my regular tax bracket. So if I make X amount of dollars per year and I fall into, a 25% tax bracket, I'm going to pay 25% capital gains tax. So if I were to make $100,000 in capital gains, earnings on the stocks, then I would have to pay out $25,000 on that. Okay. Now, long-term taxing is going to work a little bit differently. So I also invest in stocks shares of stocks that I plan to hold for a very long period of time. So we're talking about Tesla, we're talking about Amazon, we're talking about Apple, we're talking about JP Morgan Chase, we're talking about Disney. I expect to hang on to these for a very long period of time. All right, so I'm going to be taxed on that slightly differently. So at the end of the year, for my long-term investments, I'm either going to be taxed 0%, 15%, or 20%. Now, 0% is going to apply if you earn $40,000 or less as a single, or $80,000 or less as joint filing. So I'm not going to get the no tax, but you might. So if you're in that range, like you're just starting to earn, you're not making that much quite yet, then you hang on to your shares for longer than a year, and then you can get zero tax. You would pay 0% taxes on your capital gains. All right, most people are going to fall into the 15% category, where you're holding on to the share for more than a year. And then if you make $100,000 in those long-term investments, then you're only going to have to pay $15,000 for having held on to it for more than a year. And then most people won't fall into the 20% tax bracket on long-term investing, because that would require an income of like $500,000. You just sold a business for $1 million, and then you're going to be paying 20% on the capital gains. You'll be paying $20,000 on the $100,000 as opposed to $15,000 on the $100,000. And so if I wanted to get crazy, I could make up in my mind that if my short-term, volatile, aggressive strategies are going to hang on to their value for the foreseeable future, instead of paying off of my tax bracket, I can hang on to the travel stocks, the casino stocks for a year and a day, and then the next time that I pay taxes on them, I'll be paying 15% as opposed to the probable 25% that I have to pay on my tax bracket. So that's about it. All right. I hope I've cleared up the fact that you will owe money and gave you a better idea as to strategize how you want to buy and sell your shares in case you happen to do really, really well or really, really poorly. You're always going to owe, so don't try to get around that. It's not what we do here. And that's about it. All right. So I hope you found this video helpful. If you don't have an individual brokerage account like Robinhood, you can click on the link in the description box below. You'll be able to get a free share. I'll be able to get a free share. We can all grow together. And I'll do my best to answer more questions on things like dividends, options trading, which is like, crazy to me. But I just want to help you to educate yourself so you can learn how to make your money work for you. So if you found this information helpful, please click on the like button, because every time you click on the like button, it helps this channel. It helps me to grow. It helps me reach more people, and it helps me to keep my videos ad-free. But if you don't click the like button, I will put like 1 million ads on this. I swear to God. So, that's it. Thanks for watching. Remember, if you have any questions or comments, put them in the comment section below, because your questions or comments are what fuel this channel. And I'll be back with more information on training, on freedom and independence, on making your money work for you, as long as you remember to eat healthy, hydrate, drive safe. Stress levels, don't get rest, don't slap anybody. Love a client, say I love you back. I'll see y'all tomorrow or the next day, and you have a good one.